morning, everyone. So today I am joined by Andrew Sparke, the Executive Chairman of QMines, with ASX ticker code QML, Quebec Mike Lima, an emerging copper and gold explorer focused on advancing its flagship project, Mount Charas in Queensland. Andrew brings deep capital markets experience and has been instrumental in driving QMine's strategic direction, exploration success, and strong market engagement. With a recent expansion into gold through the Mount McKenzie acquisition and continued momentum across their copper portfolio, it's a really exciting time for their company. So, Andrew, thank you for joining us again.
Thanks, Gia. Great to be back.
Wonderful. Well, look, time is precious. Let's jump
Yep,
right in. So
agreed.
for those who aren't familiar, could you please tell us about Q Mines? What does your company do and what's your
Yep.
main focus right now?
Yeah, look, absolutely. Okay. We've got a really exciting business. Okay. So I should start by saying I'm the founder of the business. I'm 42 years old. I've got two young kids based in Sydney, but I've been in this business for almost 20 years now. So we really understand this space. I ran it at Resources Fund for a long time. This is my third listed company. We know what we're doing. We've got a great team here. Our last business was bought out by a large US-based private equity group. I think that's a really important context for your listeners, just to say that, we are experts at the mining space. It is cyclical, and we need to recognize that. But, there's a great opportunity at times like this when markets are off and times are tough, particularly coming into end of financial year, where there's a little bit of selling around. And I think there's a great opportunity here. And also, I'll say across a lot of the copper developers at the moment, and I'll get into that a bit later on. So,
Mhm.
yeah, hopefully that gives you a bit of context.
Excellent. Well, look, just for our other members and viewers that aren't familiar, so primarily, let's talk about your two core projects. You've got Mackenzie
Yep.
and the Mount Chalmers. Can you explain a little bit more about that to me?
Yeah, absolutely. Okay, so we've got three projects. Two of them are 100% owned, and we're just working on acquiring the last project, Mount Mackenzie, at the moment, which is more
Mhm.
gold focused. So Mount Chalmers is an absolute ripper. Okay,
Yeah.
it's a historic mine. It's a high grade mine. It produced like for your listeners, I don't know how technical they are, but for me, I get a bit excited. It produced at 2% copper, 3.6 grams gold, and just under 20 grams silver. It's a very, very high grade mine.
Hmm.
Um, and the great thing with having an existing mining operation is it means that it's number one, it's worked. Okay, it's worked previously, which is an important de-risking factor. Okay,
Hmm.
it made a lot of money previously. But what is exciting from our perspective is they really only scratch the surface here. And over the last 4 years, we've shown that through about seven resource updates across all our network of projects, we've shown that there's a lot bigger opportunity here. Okay, so that's Mount Chalmers. Uh,
Hmm.
it's right on the coast in central Queensland, so it's in a great location. But we've also recently acquired another project called Devlin Creek. Okay, now it's a very high grade copper and zinc project where Mount Chalmers is more copper and gold focused,
Yeah.
uh, but it's got grade. Okay, and God, I don't know if you investors saw some of the intersections we had, but wow, that they were phenomenal. Okay, I think we had like over 100 meters at 1.6% copper.
Wow.
Really good zinc grade, really good silver grade, really good gold grade. So these are serious assets that are generally going to be the next, copper and gold development assets in the Australian landscape. And we're really excited. We're pushing hard to really take these things forward. And as I said, we've got I suppose, a strong M&A focus as well as an organic growth focus here. So we do a
Hmm.
lot of drilling, we do a lot of development work, but we also look to acquire, I suppose, regional things that are very complementary to our existing, mining plan. And just recently, as you alluded to, we've just announced the acquisition of a high-grade gold project that's relatively close to Mount Chalmers and Devlin Creek. And we're just in the process of completing that acquisition at the moment, subject to all the usual sort of, caveats. But look, confidentially, we think that it's going to go through and it's going to really add to the mine plan. It's going to grow the scale. It's very complementary to the existing business plan. And so hopefully that gives you a bit of a sense. There's a real regional focus here. We're pulling several, growth levers. But as we'll talk about further in the presentation, that there's a lot of opportunities here because end of financial year, tax loss selling, all that stuff that creates a great opportunity for new investors.
I mean, we certainly will touch on that very shortly. And in fact, I have some very important questions. I've got some dirt I dug up on you I want to
Oh,
ask.
good. Fair enough.
Look, let's go back to Mount Chalmers here. Tell us a bit more. Obviously, you're very passionate. You're the founder of QMines, but more
Yep.
like what makes Mount Chalmers your flagship? I mean, on a technical and also on a
Yeah.
commercial level, why is it such a standout copper gold project? Withholding the fact that obviously price is at an all-time gold is at an all-time high.
Yeah, no, great question. Well, look, I suppose just to peel back the onion a little bit,
Please.
I when I ran the fund, we invest in a lot of resources opportunities, okay? And there's a lot of at any given time, there's a lot of gold opportunities,
Mm,
generally about 40 producers, 300, oh sorry, three or four, maybe four or five developers and probably 30 to 40 explorers.
sure.
In copper, there's very few companies and very few ways to actually play that copper thematic. Okay, so I suppose when setting this business up, 4 years ago, I just sort of said I want to own a copper asset that's, high grade, close to the coast, lots of infrastructure and is a genuine next development opportunity. Because I think that when obviously we're seeing the gold price run at the moment, my view is when it turns to copper, when we turn back to global growth, and there's a lot more demand for copper as we're seeing a lot of those sort of green shoots at the moment. I really believe that if once that capital moves to copper, it's just you're gonna see outsized returns, okay? Because there's very few companies to actually invest in. Okay, so that has a magnification effect, if that makes sense. So that's
Yes.
why I want to be in copper. Now, getting to your question about Mount Chalmers, it sounds silly, but if you just look at this very simply, it's a very shallow deposit, where,
Excellent.
yeah, we've sort of, I suppose, explored it down to, 150, 200 meters from
Mhm.
surface. So it's
Yes.
outcropping surface. It's a historic mine, and that tells you that it worked. Okay, as I said before, it's high grade. We're looking at sort of 1.2, 1.3% copper equivalent is, and sorry to get technical, but
No,
that
this is what we're also looking for because obviously,
yeah,
whilst we're our viewers, whilst they're not geologists as such, but
yeah.
it's also critical they understand common sense.
Yeah, no, absolutely. And I think, the great thing about Mount Chalmers is it's got this yin and yang between, really good copper grade, but also really good gold grade.
Sure.
And the whole premise is, we mine from the surface down. The shallower we mine, the cheaper it is, and it just
Hmm.
generates, outside, a lot better returns than underground mining typically does. Okay.
Excellent.
So that's the sort of the investment thesis here and why the asset's so, I suppose, so sought after.
Hmm.
Um, hopefully that gives you a bit of hopefully that helps you answer your question.
It does, and I'm very curious, is the project also boundaried or surrounded by already developed infrastructure lines that it can tap into?
Yeah, look, great question. It is, and many of your listeners will know that Queensland is, probably, second to WA in terms of the powerhouse of Australian, mining. Okay,
Hmm.
it's very well known for copper, production. It's very well known for gold production and also coal production.
Yep.
And because of that, there's actually 300 odd mines just to the north of us, mostly coal mines. And we're really lucky here that because of that, and sorry to get a bit passionate about, but there's just infrastructure in spades. So we've got large gauge rail through Rockhampton, which is, our project is located, down to the fourth largest port in the world, by metals throughput, which is, Gladstone. We've got grid power to the front gate on two sides. We've got Bitumen Road
Living.
at the front gate. We're just so lucky. We're 20 k's out of Rockhampton, 80,000 person town. So it's a big regional centre.
Mm.
And because there's so many mines around, there's a really strong engineering capability in Rockhampton. So we've got what we call a low capex advantage, and that what that means to investors is you need a lot less capital and therefore a lot less dilution to really progress this project into production, which is important for generating stronger returns for shareholders.
And you've been there before. I know that. So,
Yeah,
yeah.
yep. Sorry, carry on.
Oh, no, no. I wanted to segue quickly into that without cutting you off. More like you've recently delivered a lot of, several resource upgrades, which you've already
Yep.
said over the past 6 months to a year. I mean, what should our investors take away from this pace and the scale of your growth so far?
Look, great question. I suppose, I think it's important to hit the elephant in the room. The copper developers have been, oversold recently.
Hmm.
Okay, and that's not, QMines isn't immune to that. But if you look at what we've delivered, we have absolutely shot the lights out. I don't know of any company that has produced 7 resource updates in three and a half years of listing. That's something we're proud of. Okay. I don't know of any company that's delivered 40 to 50 kilometers of drilling, within that same period. And I don't want to bore you with it, but mining license applications, maiden reserve statements, what, 5 freehold property acquisitions, 3 acquisitions. We are. I want your listeners to know that we're doers. We're
Yes.
young. We're passionate. I've put $1 million in this business myself. We're really, we want to drive this forward. We're really trying to generate some serious returns for our shareholders. So we move very, very quickly, if that makes sense.
It does. So 7 resource updates within 2 years of listing and 40 kilometers of drilling thus far.
Yeah, yeah, and a whole lot more underway at the moment. So, and we'll get to that, I'm sure. But yeah, we've got 2 rigs on site at the moment, which is great. So,
Good to hear. Well, look, there's ongoing drilling and large exploration pipeline. I mean, how much more upside is there still ahead across Mount Chalmers and Devlin Creek? I mean, you've done so much already, so what more can we expect in the coming 6 months to 12 months?
yeah, look, I think a lot, and I know this is being announced next week, this recording, but today we actually announced an awesome sort of, I suppose, call it runway, so to speak, in
Hmm.
terms of our news flow over the next sort of 6 months. And it really is quite impressive, and obviously bias and everything else, but we've announced there's sort of at least 8, and you always like to keep a couple up your sleeves, so let's say a few more. 8 really material announcements, or work streams probably is a better word to say it, that we're working on behind the scenes. So, you know,
Okay.
so they're everything from lots of drilling results, lots of study work, more
Hmm.
acquisitions, more resource updates, updated pre-feasibility studies later in the year, early next year. So we're really driving this forward quickly. Okay.
Yep.
And I think, that is one thing that I think, even though we are in a bit of a softer period of the market for copper developers, I think,
Yep.
any new investor will look at this and say that these guys, or I hope, these guys actually deliver. And that was something that, I really focused on when I ran the fund. I used to, assess a lot of companies. In fact, I think I saw over 5,000 companies come through the doors over sort of 5 or 6 years. And
Hmm.
I used to always focus on the companies that just continually moved their business plan forward,
Yep.
regardless of where you were in the cycle, regardless of, all sorts of other sort of, external rudiments. You've just got to keep moving. And that's something I think we're really proud of. And hopefully your investors can see that we're delivering on.
Well, look, if you still have another 8 potential more announcements in the pipeline, we're barely 50% through, right?
I hope so. I think hopefully we can over deliver on that. But anyway, there's lots of pricing catalysts, for
Mm.
new shareholders, and I think that's important. Looking at where we are, we've got 3.8 million in the bank at the end of the quarter. We're
Yep.
fully funded for this current program. And that's important to show your investors or your network that there's a lot of things coming. There's a lot of those catalysts that could really generate returns for shareholders.
Excellent. Well, look, your recent PFS really shows strong margins and a long mine life. I mean, how does this actually support your future development? And I want to ask one more question in there so you can answer
Yeah,
it all together.
sure.
Long mine life, could you give us like a benchmark of what constitutes a long mine life as well?
Yeah, look, absolutely. I think from my experience over the last, couple of 20 odd years, the markets will look for an 8 to 10 year mine life as a minimum. Okay, so that'll give you a bit of a hint as to what we're trying to, develop as a minimum. But our last PFS was on one deposit. Okay, sorry, PFS meaning pre-feasibility study.
Great.
Sorry, I talk quite technically at times, but that basically means it was a study that looks at how we actually go about mining this, what sort of returns it generates, and the mine life as you're speaking about. And if you look at that PFS, it was on one deposit, which was Mount Chalmers.
Yes.
The hint here is we've got seven others, and that's what people, I think that's the disconnect that people haven't quite captured here, is that we've got this massive, pipeline of deposits and potential growth here that,
Yeah.
that really isn't factored into the price. And we're currently drilling out three more at Devlin Creek. But confidentially, there's another two at Mount Mackenzie. We're
Okay.
working on developing, or converting a lot of these, exploration and sort of resources into the mine plan. And let's not forget how important that Mount Chalmers PFS was. It's
Mm.
put off, and I'm just quickly checking here, $1.6 billion in revenue.
Yep.
I think it was $828 million in pre-tax cash flow, from one deposit. We've got six or seven more of these that we're starting to
Okay.
work into that mine plan. So for a 15 million market cap, it's exciting. I'll be candid. It really is exciting where this is going. We believe, my own personal thoughts are that this will be Australia's next mid-tier, high grade, open pit, high margin copper developer. And that's what we're trying to deliver.
And just I want to circle back to that number here. I mean, it was a very staggering number. So were you referring to $1.6 billion in net present value?
That's revenue. So the
Okay.
total free cash flow is about 828 million.
Okay.
So
If
it's
if Mount Charas is
yeah.
in full production.
Yeah, that's right. And I think the thing that sort of sets these next couple of deposits apart, particularly at Devlin Creek, is they're actually higher grade than Mount Chalmers.
Got
So
it.
so at Devlin Creek, you got three deposits, which we've got two rigs drilling at the moment. And,
Mm-hmm.
and there's certainly higher copper grade, they've got more zinc grade than Mount Chalmers. And then we move to, if assuming the acquisition goes through, which I expect it will.
Mm-hmm.
uh, when we move up to Mount Mackenzie, that's also higher grade. So I think the next deposits that come through really going to supercharge the economics here, of an integrated combined development strategy.
Well, let's talk about Mount Mackenzie. I mean, you've just acquired it, so what is the opportunity there, and how does this actually now fit into your broader strategy? I know you've touched on it about being obviously a small piece in a bigger picture out of the seven, but just
Yep.
give our viewers a context.
Yeah, absolutely. So Mount Mackenzie is about 45 k's away from our Devlin Creek project, so it's relatively close.
Good.
So it's, yeah, very complementary. As we said earlier, it's more gold focused, so it's
Sure.
it's it's got an initial gold and silver resource.
Mm-hmm.
We announced this morning that we are, or very close to announcing a resource upgrade at Mount Mackenzie, so it's going to grow. Um,
Mm-hmm.
but what's exciting there is not only does it give us our investors more exposure to gold, but it's just open in all directions. So, I'm sorry, I get a bit, I suppose the explorationist in me just, looks at how big we can grow things. And I really encourage your listeners to go and have a look at what we call the sections and plans at Mount Mackenzie, which show the drill results and whatnot. And what you'll see is that a lot of the drilling is wide open. It's open down plunge, which means down below the existing deposits. It's open along strike, which means, to the I think it's to the northwest and southeast of the actual deposits. There's several opportunities here to really grow this. So, without saying too much, I think the previous company that had it really overlooked the upside potential at Mount Mackenzie. And so
Hmm.
being so close to our Devlin Creek and Mount Chalmers operation,
Yes.
we see not only a lot of upside, but also an immediate opportunity to bring those resources into the current mine plan, at Mount Chalmers, as well as, giving our shareholders more exposure to gold, which I think is important when you see the gold price rising and whatnot. So.
Thank you. That's exactly what we wanted to, I guess, align everything so that our viewers could really understand the context. I mean, look, there's a plan to build a central processing hub. I mean, how important is that to scaling production across your portfolio now?
Yeah, look, good question. And again, I think it's always hard to give the market guidance on this, but
Hmm.
I can say, my own perspective is that, and I think we've alluded to this in various announcements, that we are aiming, keyword being aiming, to really double this, production throughput. So we talked about under the PFS on one of our sort of seven deposits that we'd be able to generate about 10,000 tons. So I'll get
Hmm.
technical, of copper equivalent production per annum. Throw 10,000 tons in your calculator, times it by 15,000, dollars, for a ton of copper, and you'll get a bit of a sense. We think we can double that, on an annual basis. So this Mount Mackenzie acquisition is really material to scaling this up. But also the Devlin Creek, the organic drilling that we're doing, we're also incorporating another three deposits there into the mine plan. So there's a big step change coming, and I mean big. It really is. And I don't think people have really grasped that when you're trading at 15 million market cap and you've got 3.8 million bucks in cash. You've got property worth, without going into it, we own our own drilling company, we own our own drill rigs. We're pretty much asset backed. And so,
Okay.
people, I think if you really have a close look at this, this
Mhm.
is, and look, do your own research. This is not investment advice. Talk to your financial advisor. I need to say all those things, but this is just very, very cheap at the moment. And, I think there's a great opportunity here for new investors for sure.
And we'll circle back to your share price very shortly.
Yep.
But I do want to know now, look, you're one of the very few low-cost copper developers on the ASX. And why do you think that the market's missed this so far then? I mean, you've said it already, you're hard asset backed.
Yep.
You've already got so much news flow in the pipeline, and you're already working across proven mine sites that has already historically delivered. What makes you such a big secret that Australia still hasn't quite touched on yet?
Yeah, I think, look, the canary in the coal mine, so to speak, is that the copper developers have been unloved for the last, and let's be really candid about it, it's been the last 2 or 3 years, okay?
Sure.
But really, therein lies the opportunity, okay? So if you look at our share price, you think, what are these guys doing?
Hmm.
But if you look at how we've grown this business, if you look at our resource growth, if you look at how
Sure.
much we've drilled, if you look at how much we've invested in the business, we
Hmm.
invested, 40 to 45 million bucks in this business over the last 4 years, and we're trading at 15.
Sure.
And importantly, that 15 represents, we've got 3.8 in cash. As I said before, we've got, with this next acquisition, we've basically got seven properties, freehold, land, farms, and things. We've got our own drilling company, so we're completely asset backed at the moment. So, it's actually a really exciting time, I think,
Sure.
from my perspective, and you'll see, there's been a lot of my network just soaking up a lot of the selling over coming to the end of financial year, which you typically
Hmm.
see selling. But I think as this news flow starts to hit, you're really going to see, things move in a pretty serious way. So, but I think the better way to answer your question is, don't look at what the market's paying for these companies at the moment. Look at what the smart money is doing. Okay.
Sure.
So obviously, if we go back 12, 18 months ago, BHP bought, Oz Minerals. Then they bought Filo Resources. Then we moved down the ladder. It always starts with the big cap companies. We
Hmm.
Rex Minerals get taken out by a large Indonesian family office. for
Sure.
an 80% control premium. That starts to give you a bit of a hint. Then recently, in the last couple of weeks, we've seen New World Resources bought out for a 96% control premium. So I'm just going through all the peer group in the copper
Of course,
space.
we need to know this.
Yeah, Xanadu has just had bids at almost 60% control premium to their current stock price. And you're seeing also a lot of and there's a big hint here that there's a lot of very well cashed up gold producers at the moment, particularly WA gold producers, who are starting to look very closely at the copper peers, largely because they're so undervalued. We've
Hmm.
seen Northern Star have a look at PolarX. There's some discussions going on there about a transaction. I don't need to keep going, but you get the drift that the smart money is really moving into copper development
Yes.
because there's such a great opportunity there. And that's just my thoughts. I won't but that's what I'm seeing at the moment.
And historically, you ran a fund, and you earlier mentioned in the interview that the
Yep.
fund was bought out by an American private equity company. Am I still right about that?
Yeah, look, close. Our last business, so I ran the fund for some time, for 5 or so years, but
Hmm.
after that, I actually my last investment or last company that I listed on the ASX was a company called Alt Resources, ALT, and so encourage your investors to go and have a look at Alt. It got bought out for about 170% takeover premium to the existing price. So,
Mhm.
I've obviously got an investment banking funds management background, so I'm very good at selling things and horse trading, so to speak. So I'm good at creating a lot of competitive tension. And in our last transaction, when typically you see these premiums at in a normal market between 30 and 60%, we got some really strong returns with that transaction. So
Mhm.
yeah, so look, we're too cheap at the moment to really look at a transaction, even a premium at this point, I don't think generates the value that we want to return as a team. But
Mhm.
I just think it's important for your investors or your listeners to know that there is a lot of those capital market skills here that can really drive outsized returns. And so once we get through that cycle, once we deliver a lot of this news, once we complete these acquisitions and also the bigger mine plan, I think hopefully at that point we've generated a lot of organic growth and we can deliver, hopefully a very strong control premium. If that were the case, over and above, a lot of that growth.
I guess if I'm trying to not, or I will read between the lines in that case, is
Sure.
so you were bought out at 170% premium. Are
Yeah.
you, given your history and your background, are you strategically positioning QMines for a takeover or at some point down the line?
Look, it's a great question. You never want to be taken over at the bottom of the market, and we are at the bottom of the market right now. And
Okay,
let's be really honest. It's been
that's
a
brave
tough
for
couple
admitting
of
that.
years. Yeah, I think it's important for everyone to know. But my premise is, and buy low, sell high. These are the times, particularly coming to the end of financial year, to start looking at these opportunities. And as I say, talk to your financial advisor. This is just me talking my own thoughts.
Sure.
But I think at these times when you're seeing companies that have valued at 15 million market cap, where they've invested 45 million bucks in growing this business over 4 years and really
Mhm.
delivered on that resource growth and that mine planning, I think it's worth a lot more, and everyone's, let's be candid, everyone talks their own book and that sort of thing. But if you start to look at what the smart money is doing, the companies, and as I said before, a lot of this M&A activity that's just started to go on, I think we're very well placed to deliver some really, strong returns. But it's important for us to first deliver a lot of that organic growth before we look at accretive growth, if
Yeah,
that makes sense. So
does.
that's why we've announced this morning a very extensive, pipeline of development initiatives that we think will deliver that growth, and then we can go on from there. But yeah, so hopefully that answers your question. It's sort of no one can ever predict the future, but I think let's just say at these levels, I think we're very well placed to do very well from here.
And there was something that I understand about you, which I said I was going to circle back on. So you already disclosed you have about $1 million of your own money and equity invested in QMines.
Yep.
What does
Yep.
that represent in terms of, are you one of the larger shareholders then basically? You've got enough skin in the game?
Yeah, absolutely. I'm the second largest shareholder.
Great.
Look, I'll be candid and say, for me, it doesn't matter if you're the biggest or the smallest. It just, I really appreciate, and I know my board and team really appreciate everyone's support. So, but it's important for me as a guy who's sort of building businesses to really lead from the front, I suppose, if
Yep.
that's the right term,
Hmm.
uh, and show people that I've got a lot of skin in the game here, that I'm really heavily invested in this, and I'm not going to there's a lot of fight in this in this team, and we're really going to work hard to deliver
Yeah.
for our shareholders. So hopefully that gives you a sense that there's very strong alignment of interests.
Yeah. You've got fight and I think also time on your side as well, like you said, Andrew.
Yeah, that's right. I'm 42 and young family. I've got plenty of energy and I'm ready to go. So
Now, I want to address a really big elephant in the room. So,
yep,
your share price has pulled back from over 10 cents last
yep,
year to now you are hovering under 4 cents now. Some would say that Q Mines looks quite cheap right now, which you've touched on, and we
yep.
agree. I mean, what would you actually say to investors right now at the end of this financial year, who are either on the sidelines or thinking about averaging down or rotating out of the other non-performing assets and looking at moving into backing, Q Mines?
Yeah, that's right. Look, with all the disclaimers, I'll just talk about how I look at this. Okay, that's probably the
Please.
best way to answer the question. We buy low, sell high. Okay, these times are an opportunity. They're not the time to jump under the covers and throw the pillow over your head. These are the times to have conviction, to act, to buy these cheap opportunities. When you're seeing this M&A activity, when you're seeing IPOs start, I just saw one of the first resource IPO kick off, Link,
Yep.
which was very well subscribed, which is really interesting. The last week, we are, in my view, right at the start of a really big let's say shift in where things are going, where the commodity markets are going.
Yep.
Gold always leads, copper's the next cab off the rank in my view. I think we're very well priced, and it's pretty obvious when you look at things like 45 million invested, 15 million market cap. Things being taken out for over 100% control premium at the moment. That tells you the smart money is moving.
Mhm.
And these opportunities are very, very cheap. And it's not just Q mines.
Sure.
A lot of the development peers have really lagged particularly compared to the gold developers. But that will change. And I think this morning's announcement shows there's a lot of pricing catalysts here that I think will really move the needle, and really show that this is really could be one of Australia's next one of the largest, call it top 5 or 6 copper producers, and we're not that far away. So when you think about the PFS at Mount Chalmers, last thought that I have, I think is important. It threw off 150, 160 million in free cash year one, and here we
Yep.
are, we're not too far away from that. And, we're 15 million market cap, and that it did that for 10, you get my drift. So we're about to double the scale of the mine plan, and,
Sure.
and is what we're aiming to do. And so I think these times are the times that to really do your research. Give me a call. Let's
Hmm.
really get into the detail. But there's no doubt there's a great opportunity here for newer investors to get behind QMines.
Thank you, Andrew. Well, look, as always, if any of our investors or viewers have any questions, please forward them to us, info at eastcoastresearch.com.au or info@sharesinvalue.com.au, and we'll personally forward them on to Andrew to respond.
Yeah, fantastic. Well, look, thank you very much for your time.
Pleasure.
No, it's been really nice to chat about it. It's obviously something I'm pretty passionate about. But yeah, looking forward to a really big next couple of months with a lot of these drill results coming in.
Thank you very much, Andrew. I'll probably have you back in 6 months.
Sounds good. All right. Thanks for your time, Gia.
Thank you.